Where we live largely determines every aspect of race and ethnic relations in America, and race and ethnicity still largely determines where we live. Housing segregation is often thought of a problem of the past. Currently, we have a resurgence of housing segregation, otherwise known as residential segregation. Housing segregation is described as the tendency for people in any two groups or races to live in separate areas. Housing segregation is measured by the index of dissimilarity, or the segregation index. This indicates the percentage of either group that would have to move to attain complete segregation. For a city to be fully integrated, they would need a score of 0. For a city to be totally segregated, they would need a score of 100. Take some time to search your own hometown. How integrated or segregated is it? For any two groups, such as blacks and whites, the segregation index tells us what percentage of the city's blacks or white population would have to move to another census tract to have no segregation at all. Now let's investigate where segregation is taking place today. Black-white segregation levels are higher in the Midwest and Northeast. Black-white segregation levels are higher in older cities with larger black populations. And the lowest level of segregation are found in the West. And we will talk about why this is happening. The level of segregation for African Americans is considerably higher than that of any other racial or ethnic group. The average segregation index for metropolitan areas in year 2000 was 64, and this is weighted for race. Segregation is higher where more blacks live. African Americans may experience higher levels of segregation than even what the index suggests, but again, it's 64 points. And for a city to be fully integrated, the score should be closer to 0. The majority of whites in metropolitan areas live in neighborhoods that are less than 2% black, so mostly segregated. Housing segregation arose around the 20th century, and this is during the time of rigid competitive systems of race relations. So this is after the Civil War, where blacks who are free were moving to the north to work in factories and other industrialized jobs and competing with working class whites or new immigrants from European countries. The establishment of racial segregation in housing was part of this pattern, and it can clearly be traced to the time of the early 20th century when African American population of large urban areas was moving most rapidly. So when we have more African Americans moving, we have more segregation. Now let's discuss how segregation occurs. This is systemic. This is intentional. And it's done through various things, one being court-backed restrictive covenants, and otherwise known today as housing covenants, where there's certain rules and regulations and behaviors that are frowned upon in the housing covenant. So they write laws or rules to make sure that doesn't happen. With restricted covenants, they make sure that certain people groups do not move into the covenant, or their behavior is so regulated that they would want to move out if they were to move in to begin with. Federal Housing Associations, or FHA, guidelines that require racial segregation for home buyers to receive mortgage assistance from the government. So even when buying a home and having to get mortgage and insurance, there's restrictions that limited African Americans from buying homes. In addition, real estate boards insisted that their members act in ways that would create and maintain a system of segregation. So using coded language like, this place is more safe. There are better schools here. There's less crime here, all very coded, but intentionally steering people in various ways. In addition, violence was used to keep African Americans out of white neighborhoods. And one tactic was the sundown town. And this is our towns where African Americans were kept out by not allowing them to be in the town after sunset. And in particular, these sundown towns were active between 1890 and 1930. And this is during a period of rapid south to north migration and from rural to urban migration by blacks. And these sundown towns had ordinances that said that if any African American was about moving around at night, they can be harmed physically or assaulted or even killed. Economics can also be used to keep people out of certain housing areas. The black population has a significantly lower average income than the white population, which limits their ability to have access to different types of residential areas. A way to measure if economics has a true effect on residential segregation, the indirect standardization is used. This is a measure of what the segregation index for the city would be if income differences between blacks and whites were the only reason for housing segregation. This is a measure, again, of segregation between whites and blacks of the same income who live in similarly priced housing. So again, if we were to take the economics out of the question, controlled for that, we can see how much race really does play in terms of housing affordability and housing access. Both measurements indicate very little racial housing segregation can be explained by socioeconomic differences between blacks and whites. So really seeing race stand out as a determinant factor on who can live in what areas. Even when incomes are similar, whites are much more able than blacks to obtain housing in neighborhoods with the racial mix that they prefer. In terms of black preferences, African Americans preferred integrated neighborhoods. They know that they need to get along with whites, particularly given the power and an influence that whites hold in society. In addition, African Americans do not want to be the first person of color or first family of color to move into a white neighborhood. That would produce a lot of stress, being the first and only. In terms of white preferences, white residents prefer all white neighborhoods and behave in such a manner as to exclude blacks from their neighborhoods. Whites would not move into a neighborhood that was a third black. This is an overestimation. We really see a tipping point occurring where whites tend to move out of neighborhoods that are starting to become integrating at a tipping point around 20%. So if we see 20% African Americans live in a certain area, we'll start to see increasing white flight. In terms of what's real is very different than what is perceived to be real. Whites perceive that their neighborhoods are integrated at 20% African American. However, most neighborhoods are not more than 2% African American in metropolitan areas. So what we see is that integration means something different to whites than to blacks. The preferences and perceptions are very different. So when integration does happen in various neighborhoods, there's certain things that happen. So what happens after integration? First, the neighborhood becomes more attractive to blacks, so blacks move in at an accelerated rate. Secondly, whites stop moving into the neighborhood. And thirdly, in some neighborhoods, whites may move out at a faster rate than normal. And in the end, the neighborhood becomes nearly all black. Even in the absence of white flight, the failure of whites to move into a neighborhood guarantees that it will become predominantly black. Another factor that preserves the pattern of housing segregation is harassment by whites of blacks who move into all white neighborhoods. So eventually the black person or black family will move out. Again, the real estate industry can also be a factor that will make it very difficult to have preferences for African Americans and other people of color in terms of their housing choices. Discrimination in the sale and the rental of housing has been illegal in the United States since 1868, but it still continues. And there's various practices that are taking place that are illegal but still occur, and one is racial steering. It's described as a practice whereby real estate agents show white customers houses in all white areas and show black customers houses in all black, or racially mixed areas. And so we see different clients being shown different types of houses just because of their race. Black home seekers encounter other forms of discrimination, such as being kept waiting longer, being told units were unavailable when they were made available to whites, and being told about fewer houses available for sale. So they're not given all the options that maybe white clients would be given. Real estate agents make comments to whites that discourage them from living in integrated neighborhoods, so using various coded language. Real estate agents may warn blacks of the prejudice they may encounter in a white neighborhood, so steering the black potential owner away from white neighborhoods. Discrimination may be understated because some of the discrimination occurs over the phone before a visit is even arranged. And so you'll hear different things, how people are treated over the phone versus in person. And so the step one is to get an arrangement to have a meeting with a real estate agent. And you can be blocked even through a phone call from getting to the next step, which is to be shown housing. White home seekers are often provided more advice and assistance than black home seekers. So again, this is institutionalized, this is systemic. Just how people are treated differently about even what options they're able to have blocks them from having the ability to own a home in a preferred area. Even if a person wanted to prove that they have faced segregation or discrimination in buying housing, it's very difficult to prove in court or civil rights commission. It requires careful and a time-consuming study. So what we see happening is that some communities have proposed affirmative marketing ordinances to require people of all races to be made aware of available houses in areas with full range of racial composition. And so what they're trying to do is show people, potential clients, where various groups of people live from the start. So what we see here is that law, although good, it does not make true change unless the law is enforced. It's merely words on a paper. The 1988 Fair Housing Act's amendment made suing for housing discrimination easier and increased the damages that can be collected. This gave the Department of Housing and Urban Development greater authority to enforce the law by establishing a system of administrative law judges to review discrimination complaints. And if the person was found guilty of discrimination, they can be fined between $10,000 and $50,000. However, this is very difficult. Home seekers know only what they are told about, not what they're not told about or whether someone of a different race is treated differently. They simply don't have all the information to even make a case of discrimination. We also see that there's limited resources for fair housing organizations to conduct tests of discrimination. These tests are very, very costly, which also puts a deterrent of proving discrimination as occurring for various reasons in the housing industry. Another tactic that creates residential segregation is blockbusting. It's described as a practice by real estate agents or speculators that attempts to scare whites into selling their houses at lower prices because blacks are supposedly moving into the neighborhood. It is illegal for real estate agents to volunteer information about the racial composition of the neighborhood because it can be a form of racial steering. So what we see happening is that the speculator purchases the house and sells it to a black family at an inflated price. So what we see is that white families get afraid that blacks or other people of color are moving into the neighborhood. This will possibly drop their housing prices, bring crime into their neighborhood, and so the white family will sell their house at a lower price. The speculator will buy that house at that lower price and then sell it to a black family at an inflated price. So the winners of all this craziness are the speculators. The only color they care about is green. So what kind of language should we hear when this is occurring? So the speculator may say, you'll get better appreciation on the value of your house if you buy elsewhere than you will if you stay here. So again, enticing the white family to move elsewhere. Next, you might hear, you really wouldn't be interested in looking south of the freeway. meaning that maybe this type of group of people live here and you don't want to live there with them. So if we apply theory here, and one type of theory is conflict theory to the form of Marxist theory, we can say that the speculator or those in the housing industry are exploiting blacks and white homeowners. Both groups are being exploited. It plays on the fears of white homeowners. The racial prejudice serves the interests of real estate agents and speculators. So again, these people in the housing industry don't really care about race at all. The only thing they care about is getting a lot of profit. So a way to combat that is for people to really think rationally and not through fear. So if whites did not believe that blacks in the neighborhood led to lower property values, they could not be frightened into panic in selling their homes and creating falling property values. So now we'll move on to other major racial groups in the United States, first being Hispanic Americans. The segregation index for Hispanic Americans is 51 points. Again, zero is completely integrated, and this is in the year 2000. And what we see among people of Latin descent is that segregation, this varies among ethnicities. Latinos considered black experience more racial segregation than Latinos considered white. So again, there's lots of diversity within the Latino population. Latinos experience discrimination about 26% of the time when attempting to rent and 20% of the time when trying to purchase a home. So almost a quarter of the time they're facing some type of housing discrimination. Latinos experience more discrimination and racial segregation due to the increased population. And what we see is that the Latino population has grown from 15 million people in 1980 to more than 44 million people today. Asian Americans have experienced open racial segregation in the past. However, today they're the least segregated minority group. The segregation index for Asian Americans is 41 points in the year 2000, and they tend to be fully integrated in suburban areas. Native Americans are less urban and a smaller population, so there's little research on how this group has been affected by residential segregation. They are becoming less segregated, and they have similar levels as Asian Americans at 33 points. When they do experience more segregation, it's in places where there's a higher population. Native Americans experience housing discrimination 39% of the time in Minnesota, Montana, and New Mexico, and this is because they have a larger population in these states. When considering just preferences and where various groups want to live and who they want to live by, we can look at the rankings in terms of the groups mentioned already. In terms of groups and who they want their neighbors to be, first comes whites, then Asians, Hispanics, and then lastly African Americans. And this matches the degree to which Asian, Hispanic, and African Americans are segregated. So the preferences match the realities of segregation. So what we see is that racial attitudes play a significant role in perpetuating segregation. So it's more than just prejudices. This becomes institutionalized and systemic. So one thing you need to have when you are buying a home, of course, is financing. In most cases, to own your home, you need to get a mortgage and insurance against various hazards. And redlining has prevented this for many people of color. And this occurs through the refusal to make loans or issue insurance in certain neighborhoods based on the racial composition or average income in the neighborhood, regardless of the characteristics of the individual homeowner. So it does not matter your income level or your credit score. What really matters is the neighborhood and the racial composition in that neighborhood. Discrimination has been supported by the government. The Federal Home Loan Board directed the Homeowner Loan Corporation by identifying neighborhoods as high risk based on the high percentages of minority population, and financial institutions were advised not to make loans in those areas. The term redlining refers to the fact that color coding was used to categorize neighborhood risk, and neighborhoods where loans were not to be made were marked off using a red line. Lending discrimination often happens, and various groups can be denied loans on the basis of their applicant's race or the racial composition of the neighborhood. If minority loan seekers are approved, they usually have a higher interest rate. And decisions are often made where lending offices are located. And we see differential treatment of white and black loan seekers. White customers were coached more on how to get a loan and given more information, while black customers were disproportionately discouraged and told how hard it would be to get a loan. Loan applications by white applicants are more likely to be approved than loan applications for minority applicants, which are more frequently denied. This is true even when their income is similar. In addition, various people who are getting loans may be given different types of loans or push certain loans towards them. People of color are more likely to get given subprime or predatory loans. Minority members and residents of predominantly minority neighborhoods are less likely to get conventional loans and more likely to get subprime loans. This allowed minority group members to obtain loans and purchase homes more so than in the past. So it seems on the surface that it's beneficial, but in reality, it's not. Subprime loans are types of loans made to lenders perceived as riskier, which carry substantially higher interest rates and sometimes otherwise less favorable terms than conventional loans. Lenders may lead borrowers into subprime loan when they could qualify for a lower interest conventional loan. Loan contracts are made without disclosure to the borrowers of the true cost of a loan, and often with the expectation that the borrower will default. Also, many loans are arranged by brokers. They do not lend money. They do arrange for the loan for someone who does, and they lose nothing if the borrower defaults and makes money from fees to originate the loan. So brokers have an incentive to make as many loans as possible without worrying about whether the loan will really be paid off. The reason why we saw the subprime loan crisis is because many loans defaulted and homes were foreclosed, even though people were qualified for loans that should not have been. People were given loans with unfavorable terms that were not explained to them. In addition, people were sold homes with hidden problems that were not disclosed, and so they could not make payments on repairs along with their mortgage. And eventually the homes were not worth the value of the home. Minorities are more likely to receive subprime loans than are whites. Low-income whites living in low-income neighborhoods are more likely to get a conventional loan than high-income African Americans living in predominantly African American areas. So in other words, a black borrower with above average income is only about as likely to get a conventional loan as a white borrower with below average income. There's also discrimination in terms of insurance. Minority neighborhoods have fewer other homes insured by private insurance companies, and homes that are insured have policies that are more expensive and not as good. Home insurance companies argue that it is not discrimination, but rather reflects legitimate difference and risk. Blacks, due to their race, are simply seeing more of a risk. Insurance agents try to sell policies to homeowners in white neighborhoods than in minority neighborhoods. They are more willing to offer policy quotes over the phone without requiring inspections for homeowners living in white neighborhoods. They have a higher willingness to offer replacement cost coverage for white neighborhoods than for minority neighborhoods. And in terms of discrimination based on voice, insurance agents can actually tell the race of someone who calls them on the telephone, and this affects the services that are afforded to the caller. African American callers were asked earlier about the location of the house. They often receive lower quality service, and often if they left a message before reaching an actual agent, their calls may not be returned. And they're also limited in the amount of information given. The Fair Housing Act of 1998 prohibits discrimination in any activities relating to the sale or rental of dwellings and the availability of residential real estate related transactions, or in the provisions of services and facilities in connection with them. However, insurance companies claim they are not covered by the Federal Fair Housing Act and must only answer to the state insurance regulatory agency. So what does this all mean? What does this affect? Why does this matter? Residential segregation aggravates the minority unemployment problem by restricting minorities to exactly the areas where employment opportunities are disappearing. And this leads to segregated schools. People often buy homes in areas with great schools. So if the schools are segregated, more than likely they don't have all the resources and teachers with great experience and great work. Residential segregation increases the vulnerability of the minority poor in a wide variety of ways. They have less access to things we take for granted, like hospitals and grocery stores, transportation, library. Residential segregation also affects the racial attitudes of both whites and minorities. They simply don't know each other because they don't live with one another. Residential segregation greatly restricts the amount of day-to-day neighborly contact between races, and contact can be a more important source of improved relations. This lessens prejudice and stereotypes. So job discrimination is one of the outputs of residential segregation. We see the shift of location of jobs outside of the city center since the 1970s. We see now jobs in various corporations move to suburban areas, and minorities are underrepresented in suburban areas. This creates a spatial mismatch, which is described as a condition whereby minority populations are largely in one place, the central cities, while the job opportunities are largely in another area, such as suburbs. And because of various issues, minority workers may not have transportation to drive to the suburban areas where the jobs are. We see a decline of manufacturing jobs since the 1970s through the deindustrialization. A lot of jobs become automated or they have gone overseas. The manufacturing jobs that provided a lot of people of blue-collar good incomes are no longer in the United States. And what we see now is an increase of service sector jobs. And these are usually lower paying jobs and usually held by women. So if we think about the family and provider role, we don't see that coming from the blue collar industrial work anymore. And so we see a lot of poor families because of service sector jobs do not provide the same types of income. So where are the jobs going? Manufacturing is more efficient in sprawling one-level factory complexes than in multi-story factories. So they go where land is more affordable and available in rural and urban fringe areas. They're moving out of the city. Through deindustrialization too, we see jobs move elsewhere because jobs become automated or moved elsewhere. We also see the change in our economy. We see a decline in the importance of manufacturing relative to other kinds of economic activity, most notably service jobs. White business owners moving their businesses out of predominantly Black or Hispanic areas is also occurring, and this may be due to complaints about work habits and lifestyles of inner city employees. These business owners may have negative attitudes generally about certain ethnic groups, and they want to avoid unionization because unions provide good working conditions and steady wages. And they may also have a fear of crime, that people living in these areas where their businesses may be may engage in more criminal activity than other groups of people. So what do people have to do if the jobs are not where they live? Well, they simply have to commute from the city to the suburb. However, if they still do this, they still may face hiring and occupational discrimination. So even when getting a job, there may be discrimination that may prevent them from going into the suburb to get that job. And also occupational discrimination may occur through sabotage or not being promoted as fairly as other candidates. We also may see people of color move into areas where the jobs are located. So if there, they may face more housing discrimination. Middle-class Blacks are only modestly more likely to live in integrated neighborhoods than poorer Blacks. Although they are moving out of the inner city areas into more affluent neighborhoods, middle-class Blacks are not, for the most part, moving to white neighborhoods. So again, even when income is good, they're not moving to white neighborhoods, they're moving to more affluent areas of color or integrated areas. And the problem with this is that there may be different levels of access to things that we need, like resources to different hospitals and schools and such. When jobs are close enough to Black residents to get to, Blacks are less likely to be employed when an employer is located in an all-white area. Employers are more likely to discriminate against African Americans or Latinos applicants because they fear upsetting white workers or neighbors. So prejudice also is a reason why various people groups are discriminated against.